across the board there. Hong Kong was the worst hit. Even the Japanese Nikkei and the South Korean Kospi saw some deep cuts. As you can see, a sea of red over there in the Asian markets. But it has been a roller coaster ride for China over the last few months, of course. Just take a look at the overall market movement to put this into perspective. The Shanghai Composite rose 150% in the last 12 months. It has fallen over 30% if you take the last 3 weeks alone, which is when the large fall happened, and just 12%, which is when the intensity increased in just the last week alone. Morgan Stanley's Ruchi Sharma believes that the state-sponsored rally is now unraveling.
If you look at the entire up move which has happened in this market over the past 12 months, it had absolutely no fundamental basis. And we've all lived through many bubbles in the past, and this bubble in China meets all the checklists of a classic mania and a bubble. In fact, in some ways, this is the most extreme bubble I have seen in the last 20 or 30 years, because there was no fundamental basis for this massive rally to take place, given how weak the Chinese economy is, and given the amount of margin debt which has been accumulated in such a short span of time. In fact, today, the amount of margin debt in the Chinese stock market is higher than any market in history. Now that the rally is unraveling and the Chinese government is not being able to control this very basic notion that's so important to the China story, that the government can achieve whatever it wants, is being questioned. The so-called Beijing put is being questioned. And the fact that that's being questioned, I think, has a lot of people worried, because the entire belief so far has been that, yes, China has a big debt problem, but China will be able to manage this because the government is in perfect control of the situation. So the fact that that basic belief is being questioned about China is what's causing this mini panic across all China plays on the world.
And on cue, China's government is scrambling to stop the stock market rout that was seen, but so far none of their measures seem to have worked. Eunice Yoon reports from Beijing that investors are now losing faith in the Chinese government policies.
Well, there's a lot of panic right now in the market, a lot of fear and anger. We went down to a brokerage earlier today, and there was a lot of hostility, a lot of retail investors who are scared about the money that they've lost, and most of that anger has been directed at the government. A lot of people have been saying that they have a loss of faith in the government's policies because, as you had said, they haven't really been holding up. The investors said that they are definitely not convinced, and when you talk about these investors, a lot of them are new, inexperienced investors. The way that the Chinese markets have been for quite some time is that traditionally equities hasn't really been seen as a very reliable investment. Most people here invest in property, or they save all of their money in the bank. And so we've seen over the past several months many investors jumping in and borrowing a lot of money for the first time. So as the market has been falling, we've seen more panic setting in. Investors worried that they have to cover a lot of debt, and that's why we're seeing exaggerated movements in this market. It's also the reason why a lot of the government authorities have been jumping in guns blazing to try to save the market. There was several moves over the past several days. The recent moves is the central bank came in with even more liquidity assistance today. Also, the government authorities called on the state-owned enterprises not to sell any of their stocks. Other companies have said that they're going to do their patriotic duty by buying up their own shares. Another big movement was the very unprecedented, at least in Chinese stock market history, of a massive trading halt. We now have more than half of all the listed companies in China have asked to have their shares suspended. So the purpose of this was to really protect a lot of these companies from the falling prices and the volatility, but it's actually having the opposite effect on sentiment. A lot of retail investors are seeing this as a very negative sign. They're worried about their ability to be able to sell or buy these stocks, and some of them are just saying that they're willing to sell out a lot of other shares because if they can't sell these stocks that are locked up, they might as well sell the ones that currently are available to them for trade. And that's putting a lot of excess pressure right now on the markets.
Well, it was all about global news today. So from Asia on to the other big global story of the day. The Greek Prime Minister Alexis Tsipras has made an impassioned plea to the European Parliament today to try and work out a solution to end the current standoff between the debt-ridden country and, of course, the Eurozone. This comes just hours after the Eurozone leaders issued a strongly worded warning to the Greek administration, saying that it had time till Sunday to draw up a new proposal which could be agreeable to all of Greek lenders. Now, Tsipras told the European Parliament that the current crisis, which could eventually lead to a Grexit, can be solved only by the European nations, highlighting the fact that his government had no intention of clashing with the other European nations. He said that a new plan would be drawn up within the next 2 to 3 days, a proposal which would look at genuine